This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Tuesday morning. Markets yesterday taking a bit of a pause. What does today hold? That's the question. We're coming to you from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Hi, Prashant. Good morning. Good morning, Nigel.
Morning.
It's kind of that time of the year when things have quietened down in the market. You know, flows have thinned out. Nothing much happening. People perhaps all getting ready for Christmas, for New Year. So it's a festive cheer all over.
Absolutely. So, just counting down few days to go and then Christmas. So, but we have to track the markets. But on a personal note, I'm very excited and happy as well.
How many hours now, the clock is coming up?
I mean,
300 minus what? 24?
No, around, I'll be around for less than 100 hours here at the studio. And then I'm coming back on January 1st. But good time.
But there's also so much festive cheer outside, right? I mean, if you look at, especially in places like Bandra, there's so much,
Beautiful.
It's lit up for Christmas and it's just, it's fun.
You know, normally me and my wife go for a walk after dinner. But yesterday we said, let's prepone dinner, let's finish it early so that's why we can walk around and see
all the lights.
Lights, there's beautiful decorations.
Christmas
but
carols,
good times, but we got a market to contend with today.
Absolutely. So let's just kick it off because the market has been looking good as well, right? Absolutely no two ways about it. Yesterday was a bit of a pause, and I think that's where we're going to begin, where we left off yesterday. So the Nifty ending slightly lower, about 0.25% down. The Bank Nifty actually was the bigger culprit, down about 0.5% plus. We saw a pause yesterday. It's been a massive two-week rally. Absolutely, stellar. Now, overnight, global cues are actually positive. There's no problem, really. So S&P is up 0.5%. The Nasdaq is up about 0.6% or so. Yields also moved up, but nothing major, right? When we're still under 4%, 3.94. The dollar index is at about 102.5. So no real problems. Now, this is the thing. You heard the big global kind of cue or the shift or the regime shift you want to talk about is the Fed pivot. That happened last Wednesday when that one statement was the Fed Chair Powell saying that rate cuts are coming into view. That got people excited like what? Absolutely, markets have gone, there's a 180-degree sentiment turn in the US as well. India has been doing well irrespective of Fed hike, Fed cut. We've been kind of on the way up. But globally, sentiment has changed on that comment on Wednesday. But it looks like, after Wednesday, every day there is a Fed official who's coming up and kind of cool markets down, saying, as they say in Hindi, ज़्यादा बोल दिया. Now you got to kind of walk back, pedal back some of the commentary. Not necessarily that markets are listening, but this is what has happened since Wednesday. You basically had on Friday, Fed's William, who basically the New York Fed president, who came out and said that cuts are not the topic of discussion. This happened actually in a broadcast sit-down TV interview. And last night, you had another Fed governor, Mester, who came out and said that financial markets have jumped, and I quote, a little bit too ahead. Now, these are all aimed at cooling sort of, animal spirits down, markets down a little bit and saying, well, don't price too many cuts in too early. And of course, they don't want markets to go wild, right? Because, markets rallying are the opposite of sort of financial conditions tightening. It's financial conditions loosening. The whole point why they're thinking of cutting, and they're talking about cutting, is that things are getting too tight. So they don't want financial markets and everything else to be ahead of what they want to do, and they want to kind of sort of direct this as ably as possible. Markets, though, did not listen. I mean, I read out the changes in U.S. markets overnight. And of course, this happened right in the morning before the U.S. market started. This comment came in. Markets rallied on nevertheless. But will this become a factor as we go into the end of the year? This is something we need to watch out for, given how strongly global markets are behaving now. Now, oil was up about 2% or so. We're at about $78. There is that problem in the Suez Canal, and we'll talk more about that later. That's a big route for sort of container traffic, global container traffic, but also for oil containers and other stuff. And we can talk more about that. But again, oil needs to be on a bit of a watch. Just to circle back to levels here on the Nifty, we need to clear 21,750 on the upside. This is the level we put out earlier as well. And the range to get cleared past is now 21,750 to 21,900 on the way up. Supports for the Nifty come in at 21,177, which is the new 40-day exponential moving average. I mean, the thing is, either on the Nifty or the Bank Nifty, even though we corrected, the hourly sort of averages did not break. So the support for the Nifty is right here at 21,177. The Nifty Bank, it ended lower but did not break the hourly averages, as I said. And support here comes in at 47,537, which is the corresponding 40-hour exponential moving average. So trail these levels. I mean, essentially, that's the whole idea. Yesterday, the market started lower and then it completely recovered. We were in the green and then there was a bit of a sell-off which came through as well. Perfectly natural given the fact that we came out of 2 weeks of 6% gains on the Nifty and the Bank Nifty, which had rallied almost about 8% or so. These are massive. I mean, you know, these are in some not bad years, okay-ish years, yearly gains. You've basically sort of done this in a fortnight or so. The mood is very positive, but as I've been saying, there's no need to chase things down. I mean, you get dips. You buy what you want to buy, especially, I mean, if you're not trading the index, it's much easier because there is enough happening under the index as far as stocks are concerned. So that's what you want to do. Not chase things higher, wait for dips. It's a market which will give you opportunities. The GIFT Nifty indicating an absolutely flattish kind of start. Sonia.
Oh, absolutely. And, you know, this is that time of the year, as we said earlier, where the lull now begins. The flows thin out. People are perhaps going to take big positions at the start of the new year. People start going on leave as well. So maybe you could see the markets consolidate for a bit. Remember, we had a big surge last week, so the market is in sort of consolidation mode. The US market cues are also very, very quiet. And this morning, the GIFT Nifty is also suggesting that we'll have a really quiet start, which is not a bad thing. Flows have also thinned out. DI has bought about 400 crores, but there was hardly anything from FIs. FIs sold about 30 crores or so. Don't lose sight of what's happening in the commodities market because gold and silver are the big focus areas now. A lot of people are talking about silver ETFs and how that's picked up in terms of, you know, an investment option. Gold prices have gained globally. In fact, spot gold prices are now at $2,000 per ounce, $2,000 plus. Per ounce. So keep an eye out on that. The US Treasury yield continues to be low, so at the lowest level since July. But the big theme for me is rate cuts, really. That's going to be the big theme of 2024 as well. Traders are now pricing in almost a 70% chance of a Fed rate cut in the March policy itself, as per the CME Fed Watch tool. And for our own markets, that's going to be the big trend to watch out for. Real estate, NBFCs, autos, all the segments that have an exposure to rate sensitive. So real estate stocks, by the way, are still below their lifetime highs. There was minor profit booking that you saw yesterday, but even if you look at stocks like DLF, right? DLF is still 70% away from its lifetime high of 1,225 that it hit in 2008. So if you expect that, oh, the rally is too much and maybe it may not continue, don't lose sight of the larger picture, which is some of these stocks are still well away from their lifetime highs. So keep an eye out on that. There are many, it's IPO season. There's an interesting IPO opening today, Happy Forgings. So let's see if investors are happy with that. But for now, looks like it's just going to be a day of consolidation.
Well, you know, so I'm going to use an analogy, right? When you're getting into a holiday season, you're going, meeting relatives, partying, enjoying, taking the kids out, and then a couple of days of just rest is good, right?
Yes.
So even for the Nifty, I think the way we have run up, some kind of consolidation would not hurt. And maybe, in fact, it's warranted as well. The uptrend, keep in mind, is very much intact. But some kind of consolidation will be par for the course. The Nifty Bank, though, moving to that 50,000 mark, that's the key trigger, you know, from the bullish perspective. How close can it get to around 50,000? And that's going to be, the big driver for the Nifty as well. Very, very high interest, though, in the mid-cap space. And still, there are plenty of winners out there. Well, there are signs that maybe some stocks have run ahead of themselves. So you need to be a little bit wary out there. Hold on to the good quality names. Well, the Nifty Financial Services Index as well will be playing out expiry today. So we'll be keeping an eye out on that one. In terms of the Nifty, well, on the premium on the Nifty came down to around sub 60 points from around that 100 points. So you're wondering whether or not there was some shorting. No, there wasn't any shorting. Actually, there was unwinding, both on the Nifty as well as on the Nifty Bank. There was open interest that was cut by around 6 to around 8%. Also, there was unwinding of positions. On the options side, after a while, we saw more call writing in comparison to put writing. 21,500 call, that was fairly active. The FI position, by the way, is still, it's still towards the long side, around 51,000 contracts on the long side. Now, you move to the options data then. The 21,500 call, well, that was very, very active in trade. 21,450 call, well, very active in trade. between both of them, it added close to around 85 lakh shares. So there was writing being seen out there. The premium on both of them came down to half. The premium at the start of trade on the 21,500 call was close to around 120 rupees. So it ended at around 65 rupees. But on the downside, the 21,400 put, well, that as well is fairly active. So just plugging in those numbers going by the options data. On the upside, the 21,620 mark, that will be a resistance zone from a bullish perspective. And because of the kind of call writing we have seen, now you have the PCR that's come down from around that 1.5, which is the upper end of the band, to around 1.1 odd. Moving to the levels, the resistance, 21,620 approximately, that becomes a crucial resistance zone from a bullish perspective. On the downside, since the 21,400 put, well, that was fairly active, premium at around 100 rupees. You're looking at the 21,300 odd band. So that's a very, very tight band that we're talking about. On the Nifty Financial Services Index, I went through the options data, and those contracts expire today. So on the Nifty Financial Services Index, the 21,600 and the 21,380 level is extremely important. GIFT Nifty suggesting, I think, a more or less flattish chart the last time I checked. As flat as can be. So let's see where we go from here.
All right, let's see where we go from here. But for now, it looks like it's going to be a quiet one. We have a lot of commentary coming in for you this morning, so let's get straight to that. Mahesh Nandurkar says the Jefferies Economic Indicator for October 2023 was down 2.9 percentage points over month-on-month to a 22-month low of 4.6%. Adjusting for the festive season shift in Diwali holidays, October-November 2023 average growth as per the Jefferies Economic Indicator was 6% year-on-year, which is in line with the 2023 performance. Mahesh adds strong two-wheeler demand raises hopes of elusive rural recovery, though other data points are not very supportive. The rise in CPI inflation is likely to be temporary in view of benign global rates outlook and softer crude prices.
All right, Rhythm Desai of Morgan Stanley weighs in, saying that India is now a $4 trillion market with indices across the board ending the year at lifetime highs. He says Indian equities continue to outperform emerging markets, adding domestic institutions hold the bid while FPIs reverse their 2022 selling. Volatility made new lows amid strong macro and micro fundamentals.
Okay, let's get you a handle on what's happening in the rupee market as well. The money markets, Abhishek Goenka of IFA Global says the trade deficit normalized to the earlier run rate of $21 billion a month. FPI flows, especially into equities, have accelerated after the Fed's surprisingly dovish pivot. He says the RBI, which had kept the rupee under a tight leash, allowed some adjustment in the rupee as well. He expects the dollar INR to trade in a range of 82.70 to 83.50 over the medium term with a slight appreciation bias.
On bonds, this is Vishal Goenka, co-founder of IndiaBonds.com, who says that after having rallied 10 to 15 basis points last week post the US Fed meet outcome, markets took a breather. Government bonds moved in a tight range, and they were mostly unchanged yesterday. He says with the holiday season and lack of significant economic data, bonds should remain mostly unchanged and trade with a 2 to 3 basis point range with an eye on Bank of Japan policy later this morning as far as the global sentiment is concerned.
Well, we've got a lot of stock-specific action to track for you. We get to that in just a bit. But for the time being, we list down the stocks for you. We're looking at Vedanta, Devyani International, All Cargo Logistics, Keynes Tech. We have PNC Infra, JTL Industries, and India Glycols. All of them will be reacting to positive news flow. While on the flip side, Apollo Tyres, KPI Green, and OMCs will be reacting to negative news flow. All right.